All right, so good evening and hello, and welcome to all of our friends tuning in from across the United States and from around the world. Welcome to our very first Meet VC live podcast event. And today's session features a behind the curtain look at venture capitalists from a personal perspective. So one of the things that I always see with VCs is focusing on startups and founders and the process of investment, but not necessarily on who they are as people and how they form their philosophies on investing. We're going to be focusing on the second part today, and hopefully that will help inform you of how to better approach and prepare for discussions with venture capitalists in the future. I am your host, Brian Antolin, the program manager at LineRun, and we are very excited to have four incredible leaders in VC joining us for our session. So they can share a little bit about their journey into venture capital and their perspective on investing, startups, and business. They include Josh Futterman, Managing General Partner of Papa Bear Ventures, Kunal Tandon, co-founder and managing partner of El Cap Holdings, Lafayette Julius, co-founder of Evolve Sports and associate at Valor Ventures, and Milena Bogdanova Bursztyn, I hope I got your name right, Milena, venture investor for Germinate Ventures. So before we get into our conversation this evening with our four incredible leaders, a little bit about who we are for those of you who do not already know us. LineRun is an experiential career and industry education platform for tomorrow's workforce. We empower our community of leaders to connect, innovate, and grow through media, events, and programs such as today's session. We invite you to check out our website, www.linerun.co, to learn more about our podcasts, classes, and career accelerator programs. LineRun. With that, we're going to jump right in and get to know each of our guests and learn about their journey into venture capital. So with that, we're going to start with Josh.
Hi, everybody. I hope you're having a great time tonight. I'm actually away on vacation, so hopefully the connection here is going to remain good. I'm going to tell you a little bit about myself. So I have been active in the startup world for over 2 decades now, starting in New York, was out in LA for a period of time, and then also spent 3 years in Singapore, helping get the Singapore ecosystem off the ground. I founded 5 tech and tech-enabled services companies over the years, had a couple of decent exits, couple where we got out by the skin of our teeth, and one that was an abject disaster. So I've experienced it all. And for much of the last decade, I've spent a lot of my time mentoring and advising over 200 founders, founding team members, people working for startups, and just found that I had a tremendous passion. So back last year, after giving some thought over a couple of years to either starting a new accelerator or going into venture capital, I decided to take the venture capital route and began to raise what really will only be the second truly industry agnostic, though software and mobile-based venture capital fund that's investing at the pre-seed and early seed stages in New York City. And what really got me into it is that I just fell in love so much with working with other founders, helping achieve their dreams. I really enjoyed that. I really enjoyed my own experience founding companies most of the time, and learned a tremendous amount that I wanted to share with them. I felt that given everything that I did and the stage that I'm at my life, I could really bring a lot to the table in New York City in terms of promoting innovation. As many of you probably know, New York is the second biggest tech ecosystem in the world, but we still, in a lot of ways, trail the Bay Area significantly. And one of the big reasons is that there just isn't a tremendous amount of very early stage institutional capital in New York, as opposed to the Bay Area. And also, most venture funds in New York are run by people who come out of the financial services industry, as opposed to the Bay Area, where it's sort of split 50-50. So I wanted to bring that perspective to New York, and I wanted to be in a position to make a significant number of investments, leading them and be able to handhold really great founders at the earliest stages of them building their companies to get them to the point where they go from startup to having a real business. So that's my story in a nutshell.
Great. Appreciate that, Josh. So my story is very different than Josh's. I like to think of myself as an accidental investor. I started my career after college working in a small import-export firm, which is a family business, and did that for almost 9 years. And I had the opportunity to take it over, but I thought technology and innovation are changing every industry, and ours was going to be no exception. So I wasn't excited about building that business for the next decade. So I knew I wanted to work in tech. I grew up as someone who spent a lot of time, probably too much time on the internet as a kid, and thought I wanted that to be my career. I think growing up in the Northeast, you didn't have a lot of exposure to technology as a career at the time that I was growing up. I know it's much more common on the West Coast to know people who are entrepreneurs and who've built businesses online. That wasn't the case when I was growing up in New York, but that changed while I was kind of working on this family business. A lot of friends who'd gone to traditional banking and consulting jobs ended up joining startups or bigger companies, and the New York tech ecosystem was really coming to its own in the 2010s. And I was getting bored of my day job and started going to meetups, and I met founders who were no different than me. They were just choosing a different path. And when I had the opportunity to take over the business, I told my dad, no, I want to go do something else. And after kind of winding that down, I started chatting with people, doing the LinkedIn cold outreach and getting more active on Twitter and chatting with people. And I learned a little bit about venture capital, but I wanted to go join a company as an operator. And then as I talked to more people were like, you've run a company for almost a decade. Investing could be something that you want to do. And I didn't know a ton about venture, but it was like, okay, 3 random strangers from the internet have now mentioned this. Maybe I should dig in deeper. And I remember sitting in a coffee shop in New York and Googling venture capital firms in New York. And I started going through, it was in alphabetical order. I made it to C and I landed on Collaborative Fund. And they had Pharrell, the musician, on their website. And it caught my eye. And I was like, oh, this is different. And I started looking at their portfolio and their investors in company like Lyft and Kickstarter and Sweetgreen and Blue Bottle. I'm like, oh, it's not boring technology either. These are like consumer brands that I interact with and overspend on their products. This is interesting, but I have a network. So I sent a cold email to the founding partner and I was like, hey, I'm in New York. I'm trying to figure out a career transition. Would love to get 30 minutes of your time on the phone or to grab a coffee. Here's a blog post I've written. Here's a newsletter I send out every morning. Would love to connect if you're up for it. He replied to my cold email in 34 minutes. So VCs do reply to cold emails. And he was like, I actually read your newsletter most mornings. Why don't we meet up for lunch? And he copied his admin. Met him for lunch, told him the exact same story I'm sharing with you. He cut me off in the first few minutes. He's like, we're a small fund. We're not growing our investment team and we don't hire random people from the internet. And I was like, as long as you're paying for lunch, this is not a bad use of my time. And towards the end of the lunch, somewhere, I don't know what changed in his mind, he was like, why don't you come on as a consultant for 60 days? We have a couple portfolio companies that need help with like business operations and go to market. I don't have the bandwidth to help them. Why don't you come on and help? I was like, 60 days, he's made a mistake. I'm going to stay much longer. And I ended up being a collaborative fund for a year and a half, working with portfolio companies and also doing the traditional job of VC, which is meeting with entrepreneurs, digging deep into different verticals, sourcing opportunities. After a year and a half there, I wanted to get some early stage experience, which I felt was missing to make myself more empathetic with investors. I ended up joining a startup for a year that ended up going nowhere, as many startups often do. So had that experience in painful learning and a really sharp learning curve. And then as I was thinking about what was next, got introduced to my now partner, and we launched LCAP in early 2019. And the way that we think about it is we're not just another seed fund, we're actually structured as a private equity fund. And what we pitch to entrepreneurs is optionality around the kind of path that you want to take to build your company. And that can be going venture scale and raising subsequent rounds of financing to build a multi-billion-dollar company and chase that opportunity. Or maybe you want to be profitable at some point and build sustainably and take a little bit longer to get to a good outcome. And we kind of offer both paths. I was in New York, moved to LA a year ago, and love living on the West Coast now.
Well, my story is a little different from Kunal's and Josh's. I kind of just started in VC. Just to give you a little background about myself, I'm a serial entrepreneur. I started my own company. I've had several startups, 2 startups, one that's most recent is Evolve Sports, which is backed by the Adidas family and international investors. So I lived overseas in Berlin for about a year or so, working on that startup, and was really had a good opportunity to build something great. And it's kind of crazy how I kind of got out there with my co-founders. We were going to move to Silicon Valley and build our startup there, but that didn't work out, and we got the email to actually move to Berlin. So I think after meetings and meetings and meetings with VCs to find capital is like what really intrigued me to get into VC. But that was one shining moment. And when we were out there in Berlin, I had the chance to meet Andrew White, and he sold his company to Bill Gates, a sports entertainment company. So I was fortunate enough to have him as a mentor and kind of be in those meetings with LPs and just understanding how to structure firms and things of that nature. So learning from him, also from the Adidas family and other international investors, which kind of led me to this time that we're going through right now during COVID. I was with my fiance, and I was thinking, what can I really do to help and give back? So I reached out to Valor Vc, which I'm currently associate at now. And I love what they were doing, investing in underrepresented founders, because I'm a founder myself, and I know what it took to actually get capital to build your company. All the things that I had to go through, and now we're in a time where we're seeing a lot of underrepresented founders and founders of color or female-led founders really shine right now, or have been shining. And that kind of intrigued me to be, how can I be on that page of helping those founders. So at heart, I think I've always been passionate about investing, learning VCs, and just how founders think, and just what made them want to solve this problem, because I think VCs as well, we're dedicated to solving problems and finding those entrepreneurs that have the best solutions. So it's a day in and day out job, and I'm very excited to be a part of building something. But to give you a little background about Valor Vc, we invest in inclusion premium companies, and mainly focus on SaaS and healthcare and fintech and AI as well. So we do about 250 to about 1.5 in check size. But we've also been hosting one of the largest startup runway pitch competitions for underrepresented founders in the Southeast. So that's coming up pretty soon, and it's September 9th. So we're really excited about that as well. But yeah, we're definitely excited, because we're seeing a lot of deal flow coming now. And just, a lot of LPs are wanting to get on board, just a lot of companies. But, my route to VC, I'm still early. Still getting my skin in the game, and, really understanding, because I know every day is a learning curve. So, but yeah, that's a little bit about my journey.
I realize I'm on mute. Thank you so much, Lafayette, for sharing your story, and everyone else. As Brian mentioned, I'm an investor with Germinate Ventures, which is a purpose-driven early-stage investment fund focused specifically on investing in transformational food and ag tech companies. And my journey to VC is also somewhat non-traditional, but I think quite relevant for the space, in the sense that I started off my career as an entrepreneur right after college, and I ran a company and successfully exited that. Had that operational experience, went through all of the twists and turns and hoops of building up a company, building up a team, and successfully exiting that. And for the last about 7 years, I've been involved with very early stage companies. I've been part of founding teams, and as also as an early stage, one of the first employees at a couple of venture-backed companies in the Bay Area, which really gave me a lot of exposure to what it takes to build a successful venture-backed business. One of those companies actually exited to LinkedIn, so that trajectory was quite exciting to see from, initially thinking about what that product market fit would be, to acquiring initial customers, iterating on the product, raising capital, and eventually exiting that technology company. And my interest was always at this intersection of operations and product, and how do we build scalable products that really solve a major problem for users. Now, I'm talking about whether it's consumer products or enterprise software solutions. And that interest of mine, always having spent some time in early stage companies, eventually led me to spend a little bit of time at a larger company, Spotify, where I really had the chance to get my hands around building a successful product that people love and they use on a daily basis, and what really takes behind the scenes to build a product like that. We're all, I assume, all familiar with Spotify, but it really takes a lot of different teams and a lot of different levers to pull in order to build a product like that. So I had the opportunity to witness that firsthand, which prepared me in a very unique way to be a very operational and very product-driven investor. And that's quite unique for food and ag tech, because when you look at that space, it's quite unique in the sense that the opportunities that come out and the innovation that comes out is not always cutting edge digital products, but it's getting there. And I'm happy to talk about that a little bit later. So my journey was really mostly driven by my personal interest in having some sort of an impact, and whether that's, impact on human health, on the environment, on communities. I figured as I was going through my journey with all of my prior experiences, that really one of the biggest lever that we have to leverage is, for environmental and human health is our food system. And I realized, and that was actually quite a for me, transformational realization during business school, that to have a fulfilling career and to make a difference, you really have to pursue something that you're extremely passionate about. And that just happened to be food for me. And I figured that there's a lot of opportunities to have that impact on human health and communities through different types of technologies and innovation. But at the core, everyone cares about the type of food that they eat. And really, through this basic need that we have, we can leverage a lot of really exciting and cool innovation that's happening, invest in that space in really smart ways, and bring about that transformational change that's very much needed and very much highlighted during the pandemic, in terms of pulling that food system lever. So that's a little bit about my background and how I got into VC.
Thank you very much, Milena, and thank you all for sharing your stories and your journeys. It's really not just interesting, but also really inspiring to hear about what influenced each of you to jump into venture. And it really helps set the stage for what we're about to talk about regarding trends and advice you have for founders who comprise most of the people who are watching this session right now. Because we now know where each of you are coming from when you're speaking about startups and capital, and the fact that each of you have your own experiences on both sides of the coin, which is something that a lot of VCs don't necessarily have. So I think we're really fortunate to have 4 people who really understand both sides. And with that brings us to our panel discussion, and would love to start with Kunal first. And Kunal, if we were to come up with a top 3 list of things you wish startup founders would understand about the venture capital process and just investments in general from VCs, what would that list be?
Yeah, I think that's a really important question. So it's a great place to start. The thing that I like to tell entrepreneurs that we're talking to is less than tell, I think remind them sometimes in the process, and then also friends who are founders who are raising money, is they're the experts on what they're building in the space that they're building in. And they're the creators of the vision of what they're building. And I think it's important to defend that. A lot of times when in a pitch, I think the best conversations I have are not someone presenting to me, but someone who's educating me about the problem that they're solving. And a lot of times investors will ask questions with limited to no context. Most of us are generalists around different industries that we look at and invest in. And a lot of times people ask questions just to see what level of conviction someone has and if they're going to kind of back off quickly or not. And I think being really confident about what you're building and the mastery that you have in that domain is really important. The second thing I like to tell people is fundraising is often a marathon. It's rarely a sprint. And I think the job of founders is your energies are better spent on finding believers in what you're building and the vision you're going after versus trying to convert skeptics. I think that's a tougher challenge and requires a lot more time. So I think if you have a strong pipeline of potential investors you're talking to, find the ones who are connecting with what you're building and get excited about it and are asking engaging questions versus like trying to drag people to get excited about what you're doing. And I think the last thing I tell people is while you are out there pitching and looking for investors to give you money, you're also looking for partners. These are relationships that if they go well, they're going to be lasting a long time. So as much as they're interviewing you, you should also be interviewing and getting to know your potential investors and partners for many years. So I think those are my top 3.
Well, I'll second everything that Kunal said, and all of those are really great things. And I could probably give you 15 things from my 20 some odd plus year of experience dealing with VCs. But one thing I've learned is that while there are certain VCs who can be very similar to each other, and that VC can often be very lemming-like, there are also lots of VCs who really differ from one another. So it's really important that when you're interested in a particular VC, that you do your research and you really get to know about them, who they are, what their interests are, why they might be interested in what it is that you're doing. Really important that when you have your initial conversations with them, they can look at you like, hey, you really want to be a part of what they're doing just the way that you want them to be a part of what you're doing, so that there's a relationship that goes beyond them just writing a check to you. So for example, in my case, with Papa Bear, and the reason I named the venture fund Papa Bear is because we're all about supporting our founders from that earliest stage to getting the full seed or Series A round, where you're not only going through business difficulties and trying to figure things out and often working on what your business model is, but you're also going to be going through a lot of emotional ups and downs over that period of time. So, one of the things we specialize in is supporting you through those ups and downs as well, which a lot of VCs don't. That's really important to me as the managing general partner and to the people that I have involved, that you're there, that you're able to be coachable, and that you're looking to hit certain milestones that are going to get you where you want to go, because that's our goal. Our goal is for you to achieve your dream. If we help you do that, we're going to do very well as well, and our investors are going to do very well, and we're going to get to keep being VCs. So that's one thing that is really, really important. A second thing is, know what you're looking for and invest in an investor. A lot of people come in and they have this idea that they want to get a check and that's going to be helpful to them. But a good venture capitalist will bring certain other things to the table. So I mentioned things that we like to bring to the table, but depending on the stage that you're in, there'll be other options. So for example, you may want to have a venture capitalist that's really tied in with the overall venture capital community where you are, and maybe out in the Bay Area, so that they can help you raise your next round, because your goal is to do that in 6 months. or you may want to have somebody that can help introduce you to people who are in the industry that you're trying to serve, right? Or that understand that industry well, and so they can help guide you through that. So it's very important that you know that. So that's the second thing that I really key on. A third thing is I get a lot of decks from people who even have product already and are in the market that are just absolutely terrible. And I've been the principal mentor for a number of top accelerators and other innovation organizations and on the board. So for me, I specialize in working with founders and getting them to write a really good deck. And all of us sitting here, we had to do, if we were raising money, we had to do our own decks, right? So people are looking at it. So really important, when you send a deck out, you should feel as good and as confident about it as possible. Don't send out something that doesn't look as professional as you can make it. And by the way, that doesn't have to mean that the design is sort of rote and it follows the same path. Oftentimes being creative with it is really important, but you want to answer what I'm sure most of you know are the key questions that we're going to be looking at, and then add in some extra stuff that's flavor, that's going to get us excited and say, wow, this founder and this company is different than these other ones that we're seeing. So that's a third thing. And I'm going to give a fourth, sorry about that, but I'm going to give a very quick one. You've got to know that even those of us who are really founder supportive, and some VCs, frankly, they're trying to make as much money as possible. Some of us go, okay, we still want to get great returns for our investors, but, we're willing to give a little bit of that up so that the founder feels really good going forward. But even when you've got an investor like that, they still have to return decent returns to their investors, just like you do to your investors, or we don't get to be VCs anymore. So you've got your business and your career, just like I had my startups. And we have these venture funds, which are really, in many cases, startups for us. We're running them. So just remember that when you're talking to us. We want to get you and we want you to get where we're coming. Anyway, so that's, I probably overdid it, but thanks for listening.
No, that was actually really great, Josh. And I think both you and Kunal touched on a couple of tips that I typically give to founders, which is one of those is really go after the smart money. There's a lot of capital to go around. There's a lot of dry powder. If you're just looking for a check and you have a pretty decent product and a company that's working, then you probably will raise your round. But it's a whole different ballgame to go after smart money. Investors that have the strategic connections, the investors who can give you a lot of the resources that will give you unfair advantages in the marketplace. So definitely going after smart money and doing your homework on VCs is really critical. But the other piece of advice that I also like to give founders is that the due diligence process is really, it's not a one-way process. It's really important for founders to also drive the due diligence process. And that doesn't only include providing timely and necessary information, but working in tune with the VCs to complete whatever process internally they have. And depending on the type of investor that you're looking for, they could be a domain expert in the case of Germinate, but they could be just a generalist fund. And so there's quite a bit of education that needs to happen if you're talking about very technical solutions for specific problems. So as founders, it's part of your job to also drive the due diligence process.
Very, very important points that we've touched on here the past couple minutes, and very valuable to founders that you really take the time to do that due diligence and make sure you're approaching the right investor for the right opportunity, and it's not just a money grab. And taking and putting in that time and effort will save everyone a lot of issues down the road just by doing that due diligence. So thank you so much. Lafayette, love to go to you next. And as someone who's just joining this venture circle, who has experience on that other side, what's the one thing that excites you most as an investor right now as we move forward into this altered post-pandemic world that's sort of in limbo right now?
Yeah, I would say, Brian, I'm excited to, just to see founders, underrepresented founders, get a lot of recognition right now. I know it's, I'm excited to see that there's still a lot of founders out there still building great products and just tackling, real world problems during this pandemic. I had a few pitches and, phone calls with founders, and, a lot of their families have gotten sick, and they still have the will to push on and take on this meeting and, to see and learn and, how can they raise capital? And that was just intriguing to me, because a lot of people at home are going through some real problems. But, just to meet those founders and to know that there is hope out there, for, founders that are building great products, it's something, it's hard to be excited during these times, but it's also very, very exciting, to be a VC and to be a founder, because we do see a future, as this all will pass. We do see a future where, great technologies, and we're seeing a lot of things in healthcare. A lot of companies are coming up with some good solutions to, beat COVID, or to, figure out how we can stay healthier for the future. And you're seeing a lot of, digital products. I'll take the NBA, for instance, because I can relate to it as, with Evolve Sports. We were building a facility, which we still are, but it had to, stop due to COVID. But we're back on track for next year. And just to see the NBA, really pivot and turn into a whole digital atmosphere and bring people back to an entertainment kind of feel at home. I think that's pretty exciting to see those companies still, do those type of events. So just to be, supporting and just to see, what's happening during those transactions. And, I think that's the main thing to kind of be excited about for me. Also, while, finding founders that are female led and underrepresented. So.
Yeah, Lafayette, I want to echo it. I think underrepresented founders, both by gender and by race, it feels long overdue, and feels like we are at an inflection point where things are really changing. So I think in a climate that's been very negative for a lot of reasons, that has been a bright spot. So I wanted to echo that. I think a similar thread, what's been kind of the theme that I find most emerging, and I think why all of the panelists up here, myself included, are lucky to do the jobs that we do, is we show up every day, go into our office, which is doing this now, talking to a screen, but we're faced with optimism of people who, despite everything, are still high conviction, really excited about building a better future in whichever way and shape, like their company is going to help build that future. And I think that's amazing that, you can click into Twitter and see a lot of negativity about everything that's going on in the world. But for like 45 minutes, an hour at a time, we get slices of optimism. And you can't help but be excited about what's ahead, despite what's in the immediate term. I think long-term optimism is so important to do the job that we do. And then I think just in our existing portfolios, I imagine we've seen a lot of founders who've had to scramble, reassure their teams, many of whom are working from home with different family challenges, health challenges, financial challenges, and seeing just everyone kind of rise to the moment in their own way and kind of steady that ship over the past couple of months has also been really encouraging. So it's been really great to see, despite all the not so great stuff going on. Those have been kind of the two bright spots for me.
That's great. Yeah, really great points. And if I can just chime in here as well, for me personally, what really excites me the most is the opportunity to back really exceptional founders solving some of our biggest challenges, environmental challenges, through food and ag innovation. And as the current pandemic has highlighted, our food system is really fragile. It needs to be more efficient, sustainable, and resilient. And there's no better time to invest in these types of transformational technologies that will have this lasting impact on both human and planet health. So that's something that very, very much excites me and keeps me very optimistic about what's next after this pandemic is over.
So many things changing all at the same time, and it's really how we not just prepare but also be intentional of how we invest our time, and also what type of actions we take in order to get to that end goal. It's so important, and I think that's the number one thing we really heard from all of you and really underlined there. Moving from talking about doom and gloom from the pandemic to something memorable in a good way. Kunal, I'm gonna start with you. From your experience doing venture for a while, what was if you had to pick one pitch that really stands out as being the most memorable and the best pitch you've ever heard, what would that be? And why is it so impactful? Why was it so impactful to you?
Funny enough, I think the best pitch I ever heard was actually before I started working in venture. And then had I had some more personal capital, I probably would have given that person a check immediately. But I remember sitting in a dive bar in the East Village in New York City, and there was a guy there on crutches who had just quit his job. And I was like, wow, this is not a great look for this guy. This guy's not having a great week. But he was excited to have quit his job, and he took out his phone and he showed me a test flight of a new app that him and his co-founder just started working on. And it was the day that they both left to go work on it full time. The app he showed me was an app called Anchor, and the vision he told me was that he wanted to democratize podcasting for everyone and thought it was the future of radio. And it was the first test flight. I signed up for test flight in that bar. It was the first beta app I ever got on. And I started using it, became a power user. They launched a few months later. We're in TechCrunch and announced this huge fundraising. And it was amazing to watch this journey. And I caught up with him a couple months later, and I was like, how's it been? Like, are things amazing? He was like, no. He was like, we were overwhelmed by all the press. We had this huge spike, and then things have like kind of crashed. But I remember the magic of that first pitch. And spoiler alert, a couple of years later, that company got acquired by Spotify for tens of millions of dollars. And I got to watch that whole journey from that first pitch of him wanting to democratize radio and podcasting to the vision and the product going to different places over time. And then ultimately, Spotify bought them because they want to democratize podcasting and want more people to create podcasts. So I remember the clarity of the idea, and that he had a product and he had a lot of conviction on how he felt the world was going to change and where it was going. And he was so early, and eventually everyone else caught up to him. So, you know, I knew in the moment it was something special. Had I had money, I would have given it to him, and I wish I had. But to kind of see where it ended up, it just made that pitch look even better in hindsight, even though it felt special at the time.
Yeah, that's very cool, Kunal. I've had some situations like that myself over the years. You know,
I bet.
You met somebody and we're really impressed. I mean, I've had literally at this point thousands of conversations with people, but I have to say that very rarely, even on the times, you know, before now starting this fund, the few times I invested as an angel, it generally was because I really liked and appreciated the founders and the founding team they put together, and I was impressed with what they had accomplished. But very rarely has a pitch really excited me, and I think a lot of that is because before I got into founding my own startups, I was in the music business for years. And I was a record producer, an artist manager, music attorney. So I was seeing talent constantly, right? And there, you know, if you're going to get signed, you really have to be able to put up or shut up. And it's not quite the same in the world of startups. But every once in a while, I'll see a pitch that, you know, I'm very enthusiastic about, where I feel they've hit everything that they've had to hit. So I'm not going to give you, I'm going to give you very brief sort of three that were exciting, because they all came about in different ways. So one of them is a company that some of you might have read about recently that just got bought for somewhere between 100 and 200 billion dollars by Intuit, a company called TradeGecko. And I lived in Singapore for 3 years, and I was the senior mentor for the first serious accelerator in Singapore called JFDI. Some of you may know what that means. Actually means joyful frog, digital. But anyway, so Trade Gecko, when they came in, they had an idea for a company that was really mostly just a feature, but they had a really strong background in this area. And over the time working with them, they were able to get to the point where what they said really impressed people. And they were one of the few, at that time, expat companies able to get a bunch of investment over in Singapore. So that was exciting, sort of working with them through the process. And sometimes that's really the way that it goes. A second one was about 3-4 years ago. I was a finals judge for one of the Princeton pitch competitions, and they actually open it up to people around the country. You don't have to have just gone to Princeton for this. And guy got up and he started giving this pitch. Said, I come from the Midwest. He said, I study agricultural science, and there's this big problem that people who raise pigs have, and that is fully 40% of the piglets end up dying because they get crushed by their mothers when they're suckling. And I went, wow, oh my God. And then he proceeded to share the story of how he came up with this product to save the lives of these piglets. And it was extraordinarily impressive. I mean, he had everything down. He was so passionate about it. He was already working with a few large pork producers around this, and it blew me away. And we ended up awarding him first prize. And he's since gone on to raise a bunch of money. And he now works with like 40% of the producers in the country, right? So really exciting. And then the last one was a company that I worked with at one of the Techstars programs in New York City called Techstars Connection. It's a company called Analytical Flavor Systems. And also, just like the founder who founded SwineTech, the guy who founded Analytical Flavor Systems was unbelievably passionate about it. And what they were doing was they had created AI software that could actually track flavor profiles in a really sophisticated manner, all sorts of different ways, much more sophisticated than had traditionally been done by tasters for food and for beverages. And they could help companies through this create new products that people would really love. And it was especially important because we're moving towards niche products. And they could also help them take products that they had already created and had been successful for years and make them better. And the thing that was so exciting about this was this young man had gone to Penn State and he had started something called the Tea Institute. He'd become passionate about tea. And so he had spent several years as an undergraduate becoming one of the foremost experts in the world in tasting tea. And he took that love for tasting tea and created this company to apply it across the board. So those are 3 companies and 3 pitches that were really exciting. Outside of those, I mean, I could probably count on the fingers of 2 hands pitches that blew me away, even if I like the companies. So.
Milena, I believe you had a point you wanted to bring up too about a memorable pitch.
Yeah, lots of colorful stories on how I've met founders and how the whole investment process has turned out. But I just wanted to take a quick moment and highlight that really some of the most memorable pitches have been those where the founders really had a genuine story behind why they started the company. That personal connection, whether it's having grown up in an industry and witness a problem that plagued that industry and they're trying to solve for it now, or they themselves experienced the problem throughout their professional career and are now trying to tackle it. That personal story really carries a lot of weight and I think stays with the VCs for a long time. Even if we don't invest, I think it's so much easier to remember that personal journey than anything that's technical or anything related to a product market fit. And I just wanted to highlight that having that personal story very clearly related to the VCs is probably one of the most crucial things a founder can do during their pitch session.
Bringing that personal connection into those conversations, it really does help bring your venture out into the open, but also allows the VC or the investor, whoever it is that you're speaking with, to get to know who you are. And I think that rings true, that old saying that, investors invest in the people first before the venture. So definitely something to include. Moving along to Lafayette before we get to the Q&A, and it looks like we're starting to build up the Q&A a little bit. We've spoken about the overall hierarching shifts because of the pandemic, and how in general VCs are trying to be a little bit more deliberate in terms of their how they include different founders from underserved communities, and also how they conduct their outreach. What are the top 3 overall trends that you see in venture capital and investment in general, and why are they important?
Yeah, I'm seeing a lot of trends, just a lot of industry sectors, as far as in fintech, and especially AI. Just a lot of enterprise and SaaS companies are really approaching and trying to figure out how to solve these problems. But besides the inclusion and just seeing a lot of diversity being added to startups as well, a lot of startups are adding a lot of diversity to the board. So we're seeing a lot of different things, especially in blockchain as well. I've been approached by a lot of startup founders that have been reaching out and kind of digging into that industry as well. But those are the top 3 trends that I've been kind of seeing, just from my experience. I'm sure there's a lot of trends that you guys are definitely seeing as well. But those are the ones that kind of stand out to me at this moment.
Great, thank you, Lafayette. And Milena, I believe he also wanted to add a couple points.
Yeah, I just wanted to say that one of the trends we're experiencing, not just in food and ag tech, is that VCs are looking for new opportunities anywhere. And we're seeing that innovation is no longer restricted to specific geographic regions like the Bay Area. Really, it can come from anywhere and anyone, to be honest. So I think highlighting the diversity aspect of not just VCs, but also founders supporting these diverse teams is really it's great in terms of helping grow companies, helping support local communities, and local talent. But really the biggest point here is that innovation is happening anywhere and everywhere, and VCs are paying attention to that. And then the other point that I wanted to make is more focused on the domain that we invest in, which is food and ag tech. And what we're seeing is that there is an increased focus on the digitization of agriculture and of food. And a lot of us don't really think about it, but when you're talking about accessible food, healthy food, sustainable ways of growing our food, it all comes down to the farmer's well-being and making those operations really efficient, effective, and sustainable. And so agriculture being one of the last and least digitized industries, there's a huge opportunity, not just for investors, but also for founders to solve for really big challenges that have huge impact on our planetary system and on our health. So those are really big trends that we're seeing.
Love how you brought up trying to solve societal issues, because that's in general not only a hot button item, but also it's becoming so relevant because of the situation we're all in right now with COVID. And I also think that brings us to this inflection point, starting off with our Q&A here on what makes a startup truly a success and a failure, because it's more than just dollars and cents. And Kunal, we're going to go to you first. Have you worked with a company that had an amazing idea that you thought had a lot of potential, but they failed? And in hindsight, what could you have done differently to support them as an investor?
Yeah, I think I'm still early enough in my investing career that no failures yet, but I'm sure they'll come at some point. But I think I can speak on failure from my own experiences. When I shared in the beginning my story of working on a startup for a year that ended up failing, as I painfully look back on that experience for like lessons of what we could have done differently. I think there's a couple things. I think the biggest thing for any startup is you want to find ways to stay alive as long as possible, because what you're optimizing for is learning, and you're trying to learn, find product market fit, and stay scrappy as long as possible. So I think that enables you to control your destiny. What happened for us is we built a great product and we spent a lot of time doing that, and we didn't talk to enough of like who we believed our users would be up front. So what happened is we had a great product that then we went searching for like, who did we build this for? And that was like totally out of order. And it sounds ridiculous in hindsight now, because if the company came to me, I wouldn't invest in it. But I think we were so obsessed with like solving a problem with product without actually understanding whose problem we were trying to solve. So what happened was we had a beautiful product that had no product market fit because we weren't sure who was going to use it. We had different cohorts of people using it. We're like, is this for freelancers? Is this for product managers? But it never quite resonated with any single group. So I think surviving long enough to figure things out is the first thing, but also getting out there and talking to people before you start rolling up your sleeves to build product is really important as well.
Yeah, Kunal makes an extraordinarily important point. Having spent the last 10 years advising and mentoring so many founders, that's literally one of the first things that we say to founders, right? And if you go through Techstars or Y Combinator or any of those companies, the first thing that we're going to have you do is we're going to have you go talk to like 100 potential customers and other people who can give you insights in what you're doing. Because almost invariably, the approach that you got or the idea that you have is not going to be the one that ends up being your business. And so you sort of have to be in a place where you're okay with that. One of the biggest issues that I found with a lot of founders, especially younger founders who haven't been through the wars, who haven't suffered setbacks, is there's a tendency to let their ego get way too much in the way of their success. And what that means is they get so attached to the vision the way they had it initially that they can't listen to their potential clients, and they can't listen to the mentors who are trying to help them succeed in the business, right? So they get very defensive, and then the next thing they know, it's 6 months later and the business is dead. So it's really important when you're starting a company, and I had to learn this as well over the years of starting all these businesses, right? Is keep an open mind and really be ready to listen to what people are saying and adapt. Because if you can do that and you can hang on, you will succeed, right? That's absolutely a fact. There are two other things that I think really come up a lot when companies fail. The first is obvious, and that's lack of capital. It is not, there is a lot of money out there, but it isn't easy to raise money. It's not easy to raise money, and I've done it multiple times already, and most of the time I've been successful. But even when I've been successful, there have been points when I've gotten to like, oh my God, am I going to be able to pay my bills next week? Because I haven't been able to close this round yet. So you got to know that you got to sort of keep pushing through and keep talking, and you want to do all of that research and know people, but within that, it's still a numbers game, right? You got to talk to a ton of people and perhaps Kunal can talk to this as well. As a venture capitalist, I'm in the midst of my raise right now. I am going to talk to a lot more people than the average startup founder. I'm going to be talking to 300 or 400 people to close on my fund. And it's a decent sized fund, but it's not that big, right? So you've got to be ready to do that. Don't let yourself get knocked down by the nose, because you're going to find somebody who believes in what you're doing if you've got something there. So that's really important. And then the other issue that really comes up on a regular basis is that most companies are founded by teams. And if those teams have issues with each other, that's one of the biggest reasons for companies to fall apart, even if they're doing well in other ways. So one of the first things that you got to do when you're putting your startup together is you got to make sure that the other people on your team and you can be respectful to each other. Even if you have disagreements, you can talk through it and you can come to the necessary compromises, right? You have to really treat each other well as human beings. And the other thing that's really important from a legal standpoint, because I'm a lawyer as well, is make sure that you've got a founder's agreement between you. You know, and that's right at the beginning. It's really hard for people to sit down and do it because people are uncomfortable talking about money and the other issues. But it is so important for each of you to know what your principal responsibilities are, right? So that you can carry them, what shares each of you are going to have, and how things are going to shake out if the amount of time and effort and money that each of you brings in changes, right? You want to be able to make sure that everybody is feeling good about what they're doing and feels like they want to continue and want to be involved. And then also within that context, if you are the founder and you've got co-founders or you've got initial team members who aren't founders who are working with you, and you know they're not happy and they're causing problems, or they're not able to do the work at the level that you wanted them to, it's extraordinarily important that you don't just keep holding on. You got to let them go as quickly as possible. And that can be tough and it can be painful. But the last thing that I will say is if you have one or more people on your early stage team that are bringing everybody else down, it'll be the kiss of death for your business. And it's better to just, you know, cut bait at that point and make sure that you guys are going in the right direction and the employer, the co-founder, is able to go do something that they're going to be happy. So those are the things that come up with the companies that I've advised and within my own situation.
Josh, these are such amazing points that you make. And actually, internally, we always joke that our job is not only to mentor teams and founders, but also to oftentimes be their personal therapists. So it's part of the game.
And I'll just state, you know, Kunal and Josh, you guys made some great points because, you know, I can definitely relate as a founder. And I just want to say what you're seeking is seeking you. And, you know, when we built, you know, Evolve Sports, all we were trying to do is help a few kids get access to training around the world. And we created a mobile platform and that allowed that. And in that time, we reached 300,000 kids around the world, which allowed us to travel. And it was amazing to us when we went to Germany and we went to Australia that kids in their rec center were actually using our product. And it was just mind blowing to me that we had that much reach off of an idea that we created. And, you know, we didn't have any capital. It was just family and friends. We put up 30,000 to 50,000. And if you know, building an app costs 200 to 300,000. So, you know, us being fortunate enough, my co-founder to actually, you know, build the app and, you know, me having a little bit of background, you know, we got it to the app store, but we needed that support, that capital to actually build a team to build it out. And that's where, you know, those failed meetings having with VCs, we didn't stop because we had access to our customer. You know, it was product fit already. So when the Adidas family actually built the accelerator in Germany, it was perfect timing, you know, because we were still building. We just kept our head down and, you know, we were making, you know, MRR and, you know, doing these different things. But, you know, there was a VC and a family out there wanting to invest in us. And, you know, now I think about it, you know, we were actually one of the first, first underrepresented founders back then, but we had to actually leave the country to go get capital. You know, that capital was international. There's no US based capital, you know, so now we come around 2 years later, now it's opening up. And I just think that's amazing. You know, that all this is happening at the same time. So we were actually early building that product, but now it's all coming together. So what I say to that is, you know, what you're seeking is seeking you, and fail forward in building that problem.
Love it. You brought up a really great point, Lafayette. It's fail forward and taking the lessons you learn from failing to ensure success later on. And one of the things that always stuck in my head, and I'm a serial founder myself, is that the absolute worst thing that can happen to you as a founder starting out is to have immediate success. because it will all go, it just goes downhill from there. And it's, you skip all the levels and you don't learn all the any of the lessons, and trying to dig your way back from that puts you back years versus going the other way, climbing the mountain and learning how to sustain the success. So that's great. Milena, we have a question from Niev about your experience as a woman in VC and the roadblocks you face. So if you can talk about that a little bit.
Sure. Yeah, I think that's a really great and very important question. And I think we've all touched on this issue of gender representation in the industry. And just for reference, a couple of statistics that really stand out are that less than 3% of venture capital money went to female founders last year. And I think that's consecutively now for many years. Very little capital goes to female founders. And on top of that, just about 10% of venture capitalists are female. And so as a woman in VC, you know, it's very important for me to be conscious of these numbers and to be part of the solution. And that's not to say that, you know, it's an easy thing to do, just being aware of the numbers, but actually actively doing something about it. And on the investor side, one of the biggest things that you can do to have an impact is to talk to more female founders or any really founders from diverse backgrounds. It's our job to spotlight these founders and the products that they're building and the solutions that they're trying to come up with for very difficult problems. In addition to that, you know, on a more personal note, I've been very fortunate to be part of a team that's exceptionally supportive of me as a female in VC. And I think, you know, we as investors have a role internally to play on who we hire, who we promote internally or externally, and how we structure our teams to be more diverse. Because, you know, I don't have to quote any statistics or studies, but I think at this point, it's a fact that more diverse teams outperform non-diverse teams. And so I think it's critical to keep that on point. I think it's critical to have these conversations with team members on the investor side and with the broader community. You know, the investor community is very small, and, you know, coming from food and ag tech investing, it's an even smaller community. And so having these open conversations can really be, you know, they can be a catalyst for enormous change that I think everyone is now wanting to see. So those are a couple of points that I wanted to make on being a female in venture capital.
Super. Yeah, no, I think it's really important. And I also think, you know, Lafayette made the point earlier, and I think Milena is talking about as well, is that VCs are becoming more and more open to investing in women and underserved minority founders, especially, you know, out in the Bay Area. People will talk a good game about it, but I think if you get out of the Bay Area, you will see that there are more people who are willing to work. You know, for example, with me, you know, part of my philosophy is that 20% of my companies, at least, that we invest in should have at least one underserved minority or female founder. And I'm basing my venture fund in Harlem. So, you know, we're up there. I wanted to actually start an accelerator in Harlem. And a couple of years ago, it was really tough. Now I mention to people that we're going to be based in Harlem, and it's really, you know, a big thing to them. They say, wow, you know, this is great. And I also wanted to make a point, just follow up what Lafayette said when he was talking about his own business earlier. And that is, if you're a founder and you're a non-technical founder, one of the most important things or most impressive things to a VC is if you have been able to persuade somebody with solid technical chops and say somebody who's a marketing expert to come on board in a meaningful manner with what you're doing from the beginning, and that you guys and women have produced a first iteration of your product. If you can do that, and it's not that expensive, it's not like it was when I started 22 years ago and it cost me $1 billion just to get a first product off the ground. You can literally do it, like Lafayette said, with 20 or 30 grand, putting it on your credit cards, right? Show that you really want to make this happen, that you got this great idea that's inspiring to people, that you've done the research that you need to do by talking to potential clients. And you do all of those things, and that's going to impress us. We're going to want to talk to you. So.
Yeah, I definitely agree, Josh. And Milena, just being at Valor and with Lisa Calhoun leading our as our GP, she, I understand that female-led founders and managing partners are very few, so under that 1% and 10%. So just being in those rooms with Lisa and just she's spearheading what is growing, and she's getting behind females and us as investors and managing partners, we're getting behind women that can see things that we can't see. And I respect it, because, Lisa, she's this Caucasian woman and she's investing in inclusion premium. And I need to understand her story of why are you doing this? Why are you raising this fund? Why are you, because she wants to help. And, I think that integrity is what's needed, especially in female founders and investors as well. And that it raises the point of why it's exciting to be a VC right now, because everything is coming together because we don't have a choice, and a lot of people are seeing that our governments are failing us, so us as the people are in control, and when you have that spirit in those meetings and meeting with entrepreneurs and every day, you're definitely going to carve a way for for the future. So but yeah, definitely reach on what all you guys said. Definitely.
That's a really great place to leave it off. The fact that it's really come in full circle where these are all issues that we kind of knew about just coherently, and that's all that we've always faced, but it's only now because of the situation we're in and how the awareness has really come full circle that we're at a point where we can take action. And for the founders out there who are really in that position where they don't know where to turn, this is probably the best time for you to start just reaching out to VCs just to have discussions and not just pitch them, but just to talk to them and to have those conversations. And that's something I highly urge all of you to do at this point. But for now, we are at time, and I am really, really thankful for all of our panelists today for sharing not just your stories, but also your incredible insight and advice for our audience today. It really means a lot, and we really appreciate it. And thank you guys so much. And for our audience, thank you all for joining us. And before we go, just three things I want to share really quick. So even though most of the people who are attending this and watching this are founders, for those of you, if you were looking for a job, we have an event coming up on the 24th of September featuring recruiters from Lyft, Medium, and Twitter. So that's something to check out if you're looking for a job in tech. Silicon Valley. I've been looking forward to this for a very long time, and we have some real heavy hitters in the Valley who are going to be sharing some insight with us, including the founder of the Founder Institute, Adeo Resi. So something to check out as well. But in the immediate future, in 2 weeks, we have the future of machine learning, and we have three incredible leaders from Google, LinkedIn, and Amazon who are going to chat with us. So for those of you who are interested in any of these events, that's linerun.co/events. So really great slate of events coming up in September. Again, thank you all for being here. Really appreciate it. In the next day or so, for those of you who are registered, you're going to get this video pending Zoom, and hopefully the Zoom people are good to us with the edit. And also the links for each one of our panelists LinkedIn, so you can connect with them. So they're all ready and willing to talk and to help. And all it takes is the initiative for you to just reach out to them. So again, thank you all for joining us. Really appreciate your time, and we'll see you soon.
Thank you.
See you.